Hey everyone, I'm Iva Pearce with Coldwell Banker Realty, and I have Donna Romero with Supreme Lending. We're gonna share just a couple words about what is the market doing today. As a real estate agent in the area, I would like to tell you we are definitely in a seller's market. I mean, in my practice I haven't seen anything quite aggressive so far. We have homes that are flying off the market within a couple of hours. Sellers will receive multiple offers already above asking price. They will like one, and they're not even asking for highest and best. So, speaking with a lot of buyers out of our state as well as locals, actually, everybody wants to see what's going on. I want to see this property, that property. My first question is always, are you ready? And the reason I'm asking that is not to push someone and or saying I'm not going to show you that property. Is the reason I'm asking is because I know by the time we go to see it, there will be an offer already. So it was a good point. Donna had the idea to share with you and give you just a couple tips on what you need to do to be ready. And when you go see a property, then you feel comfortable, you can make an offer, and then I can help you from there. So share with us. I mean, I'm pretty sure that we've seen or we've heard a lot on what you need to do, but especially in a market like this, I feel confident that that's going to help some of you out there.
Well, like Eva said, it's important that you're mortgage ready when you're going to be buying a property. And in this environment and with these rates today, like Eva says, the houses are flying off the shelf. So if you're looking to buy and you're ready to buy, it's going to be important that you first and foremost have a minimum credit score. The credit score is very important depending on what product you go with. In most cases, you're going to need at least a 620 credit score. There are those lenders that will do lower amounts, but you're going to have to put more down and your interest rates are going to be much higher. So you're going to have a minimum score.
The next is it possible that they can find the credit score themselves, or it's better to just reach out to a lender? Because my usual thing is if someone reaches out to me, I just give them the contact and say, go for it. You know, that you can.
I know a lot of people like to use Credit Karma and those types of places to get their scores. They're not always accurate. They're not the credit bureau. They'll give you an indication, but they are not that accurate. You are allowed to get one credit per year from the credit bureau, and so you can check into that. You can go to creditreport.com, I believe it is, but I can follow up with the exact thing.
We can put a link in the description. And also, I think most of the banks, they will give you the FICO.
They'll give you one of your scores. So when you go to finance, we're going to run all three bureaus, and we're going to use your mid score. So sometimes, if it's TransUnion they're giving you, that might be the highest score. It might not be your mid score.
But the most important part is that you will have to know your credit score at one point. And again, if you want to be ready, I always recommend, again, just reach out to the lender that you trust, or usually call a couple local lenders in the area you're buying so they can navigate. So credit score is important. That's
the next thing, is you're going to have to be looking at your down payment and your closing costs. So you have to be ready with that. The next thing is you need to be gainfully employed or have a monthly income. They need to be able to see that you can pay back the loan. So that's going to be very important.
So on that point, for buyers out there that due to recent pandemic, if they have been laid off or not working for a couple of months and then go back to work, is that
in
going
those
to
cases that is going to have an effect, but there are some things that they can do. It's going to be important that you have at least a 2-year work history. Now, for younger people just coming into the market, getting out of school, oftentimes you can use your school history as part of your job history, but you're going to need to have at least 2 years of either job and education history. That's going to be important.
And also, if they have a couple of years or maybe one, and they're switching jobs, but it's in the same field,
they should be okay. You should be okay. But I'm going to recommend that if you're looking to buy a house, don't change your employer right now.
That's for sure.
Yeah.
That-
So
don't
stay in the same
change.
job. Don't be changing your employer. You can do that after the fact. So that would
Okay.
be it. So once we've looked at your credit score, once we see that you have gainful employment, we're going to take a look at what your debt ratio is.
Okay.
So how many other debts do you have and how is that going to impact what you're able to afford? And that's going to be important for somebody like Eva to know what can you get qualified, because she doesn't want to show you a house that's higher than you can afford, because it's always easier to find a house at an expensive price that you love,
Right.
and then to find out you can't get it is not fun.
Right.
So you need to get with your lender to find out what you can afford.
Okay.
The next thing I would tell you is, again, don't change employers. Stay with your same employer until you get this done.
I have the feeling that you've run through some of those.
I have.
cases.
So it's
So even if it's tempting, if you have a really good
Right.
offer from another place, just hold on for it. Just
Well, another thing that
hold
I've run into too is people will be in a field of work where they've been employed and then they decide to go into business for themselves. And even though it's the same line of work, you're going to have to wait a
Weird
while.
change,
So
yes.
if you're going to start your own business in the line of work that you're employed at, wait until you get that house bought.
Okay.
And then the last thing is really important is don't go out and make some big purchase. Don't go buy a new car. Don't go buy a boat. If
Don't
you're
go buy a truck because you're gonna need it to move some,
Yeah.
bigger furniture.
Right. And don't be buying the furniture yet. So you want to make sure that when you're working with a lender, you know how much you can afford, and just hold off on any purchases, new employment, until after it's done. So,
Or at least if you were to change something that, especially if it's necessary or you
Right.
really need to, I guess just call your lender, have
Yes.
that conversation, and then move on safely. And I just had a thought and I forgot what I wanted to really talk about in regards to being mortgage ready. Yes, I think when you have that idea of buying either a condo or a house, whatever that's going to be, the prices that we end up thinking that we can afford or we want to afford that, I will be okay with, 350 or 550, whatever. It always comes down to estimate monthly payment, principal, interest, insurance, escrow.
Right.
So that conversation that you can definitely have with the lender. And I just remember my point. When the lender is asking you for a piece of paper, even if you call your agent to ask, hey, I just gave her one, why you're asking me for the same, it's important because all this paperwork the lender is asking so they can get you the best possible interest rate and the best terms for you for the next 30-year fixed or whatever jumbo loan if you're purchasing that.
Well, something else to point out with the current market and the pandemic that we've had, we've got underwriters asking for updated pay stubs every time you get paid. Because again,
that's gonna be
it's
okay.
always changing.
Yeah.
We didn't used to do this, but because of the environment that we're in, somebody can be employed today and then tomorrow not be. And so it's very important to the underwriters that they know that you're employed, and when they do that loan, you're able to pay it back. So don't be surprised if you're asked for additional information, especially if you've purchased before and you're buying again. Some of it might not make sense, but just keep in mind the environment that we're in right now.
Right, that totally makes sense. Well, that was a video just for being mortgage ready. I think we kind of checked all the points. Unless there is
Nope, those are going to be the highlights of what you need to do, and it's important that you get pre-approved before you start looking, so that
pre-approved, definitely, yes.
Because like I said, you want to make an offer, you want to be able to do it.
You want to be ready for. So we're talking credit score. Depending on your purchase, you need to be ready for closing cost or down payment, which again, the numbers can be given to you, or you can work the numbers with your lender. Then proof of employment. Don't make any purchases, don't change anything. The one thing that you should be focused is get with your realtor, get the right house, get this process done and over with, and then you can pick the furniture, you can pick your new car, your new TV and everything.
Get a new job, become
get a new
self-employed, do whatever you want. But let's
So,
get the house first.
Right.
Okay.
I really hope that kind of helps some of you out there. And even though, like I said, you most likely have heard this or somebody told you already, hundreds of times, it's always helpful.
Yes.
Especially if you're thinking about purchasing in today's market. So if you have any other questions, reach out. We'll be happy to give you more details or expand on that topic. And we're gonna see you soon.
Bye, everybody.